Hey, this is Sasha, and welcome to another episode of Let's Talk Stocks. And in this episode, we're going to go back and take a look at some technical analysis basics. And we're going to take a look at the pennant pattern. It is a continuation pattern, which means it's a pausing pattern. It pauses and then it continues moving in the same direction that it originally came from. We'll look at the bullish side and the bearish side. What does it look like? Some of the previous trends, the volume, projections, entry point, and a few tips. So when we look at the pennant pattern, you can think of it kind of like a triangle pattern. It's just a lot more compressed. It's a lot smaller of a pattern. Usually with a pennant pattern, what happens is let's just take a look at the bullish case scenario, is it runs up very quickly. Okay, so the movement is very fast on the bullish scale. And then what happens is you create kind of this triangle, a very small triangle, symmetrical triangle pause. And what this does is it hits kind of one point here. This will be resistance 1, and then slowly isolates here. Okay, for maybe 4 bars, it could be 8 bars, depending on what you're looking at. But it isolates here for a couple of points. Okay, so we could do maybe 3 or 4 points, and then eventually it'll break out very quickly to the upside. So the pause is very short, and that's the key difference here, comparing it to, let's say, a symmetrical triangle, where this is much shorter. A symmetrical triangle maybe 2 or 3 times longer or take a lot more time, and this is much more violent here. Sometimes, again, this could come back and retest kind of this supporting resistance level, so it'll come back and then go higher, but really that's what the pattern looks like. Okay, previous trend, of course, is going to be in the same direction that it's moving in because it's a continuation pattern. The volume, if you're looking at the volume, you're going to have much heavier volume. Okay, so this is heavy in the movement of the direction of the stock. And then once we get into this little digestion period, it might die down or get a little bit lighter or weak. And then again, you'll probably see a massive amount of volume coming in as we get another breakout move to the upside. If you're looking for projections, what you're looking for is really the distance here that we've went from the initial breakout point kind of to that resistance level. That's typically a nice level to go with, and then move that to from the breakout of the resistance to the next stage. So here I'm doing my hands width. So again, it'll probably be somewhere up at this level will be the target area that you're looking to hit, is somewhere right around that point. It doesn't always work out that way. That's kind of a guideline. I also think of it that it's going to not hit those levels because we've already moved with such great steam and power, and when things move like a rocket ship, eventually they pull back. So typically the target, from what I've seen, is it doesn't always hit those targets, usually a little bit less, especially with these fast acceleration movements. It just runs out of steam, it runs out of energy, it runs out of fuel. It's just flooring the gas pedal. So the movement is, it doesn't always hit those targets. If you're looking for entry points, I would take a look at just right where it kind of breaks out these levels or retest those levels. So this could be kind of your entry point 1 and 2. And that might be a nice level to get in, is right after the breakout. The issue if you get in earlier is during this digestion pattern, sometimes it could turn into a longer consolidation pattern and then it'll roll over. So that's why you typically wait for that high volume. Okay, and once that high volume comes in, along with the breakout in price, nice wide price spread, that's a much safer entry point. If you take a look at the bearish case scenario, it's very similar. So again, we'll look at this kind of tight pennant pattern. And if I draw it a little bit backwards here, you can see we're coming from higher prices. We move lower, and then we get this little pause, move around in here a little bit, and then, we break down and move lower. Okay, so that's kind of the way it works. On the bearish case, very similar to the bullish case, just flipped a little bit. Volume, the same thing. You're looking for great big volume anytime that you're moving lower. So that would be high volume. This might be lower volume, and then higher volume again on the breakout or the breakdown, simply because, again, there's more selling pressure that comes in. So anytime that the movement is strong, just like here we're moving down, anytime the movement is strong, you'll probably get the higher volume. If you're looking for the entry point here for the shorting side, this would be your shorting entry opportunity. If you're looking to go long on this, I would wait till you follow through and continue all the way down and create kind of a consolidation pattern down here somewhere, or find a reversal pattern before you look to enter in a long position. But that's kind of the bearish case scenario. The projection on this one is similar to what we do with the bullish. You look from where it started that sell-off to where it started to do the bounce and consolidation pattern, and then take a look at that and move that range to the next stage from where we're breaking that support level in the pennant, okay? So that's kind of what you're looking at. As far as tips go, sometimes these things can actually look a little more like a sideways digestion pattern. So sometimes they might look kind of like this and then move lower. This could be considered maybe a flag-like pattern, simply because there's not a lot of ticks and not a lot of candlesticks in that area. But again, very similar to the flag pattern. If you haven't seen that video, so take a look at that. But sometimes these can look similar to a flag pattern where they're really just a tight consolidation range that's pausing and allowing the stock to continue moving in the same direction. That's why it's a continuation pattern. All right, so let's go to the screen and take a look at the pennant pattern. Here we have WD, or Walker and Dunlop, right around the year 2012 to 2013. We had a consolidation here in this stock for 2011 to 2012, about 2 years where the stock moved sideways. And then the stock started to break out from about $13 to about $16. When we got to that $16 mark, we did a little bit of a consolidation. Now, this is the weekly chart. Sometimes you'll see things like this on a daily chart. So you could call this, in theory, a symmetrical triangle as well. That's also possible, but it is a little bit tighter, so maybe it would be considered a pennant pattern. Keep in mind, these patterns are just names and ways to reference these patterns. So overall, the symmetrical triangle looks very similar to the pennant pattern. The pennant pattern is just a little bit tighter. So the question is where do you cut off the pennant and make it a symmetrical triangle, right? So these things can be a little bit more difficult to spot and read and understand when you're in the live trading environment. Nevertheless, your key point and importance here is to really recognize, hey, well, this is consolidating here very tightly. As that stock is consolidating tightly and it starts this massive breakout beyond this little triangle pennant, then it'll continue moving into higher prices, and that would be your entry point. So with nice bullish volume that starts to pick up, you have nice wide price spread, and that stock increases from about $18 a share to about $21, $22 a share. Not bad for a stock that was about $11 a share earlier. So you have a pretty good increase there. Eventually you get to a stretched area, and then the stock pulls back. So if you look at the distance here on this, from that pennant there, you can see the distance also is very similar to that range. So nevertheless, tend to work out fairly well in this pattern. Let's take a look at another example here. This one's a little bit more difficult to see. This is on the daily chart, and this is AMD Advanced Microsystems. So I wanted to share with you more of what a daily chart looks like here. So you could see when we increase in price from about $10 to about $16 a share in 2018, this could also be creating kind of a pennant pattern there. It could also be, again, a symmetrical triangle, very close to that. We have a pop or a break at around $18, and that stock got into the $26 range. Notice the volume that was increasing during that peak as we increase in the stock price from 10 to 16. And then we decrease on the volume as we're kind of in the pennant because it's digesting. The stock is digesting. And once it's done digesting, it starts that breakout with nice big volume. We move to higher prices, and boom, that stock picks up speed. Little bonus for you here. If you take a look here, we have just right under that $20 range. You could also say, hey, well, this is another little triangle pattern there as well that's being created. So anyways, that's basically the pennant pattern for you on the charts. Thank you so much for joining me in today's video. I hope you found it helpful and insightful to your technical analysis and building up the skill of your technical analysis. And this is just, remember, a starting point to learning more about these chart patterns, because with time, you'll start to see them more and more. If you want to see other great training videos like this one, be sure to get on the newsletter list by clicking the button right over here. Enter your name and email address when you get there. That way you don't miss a beat on any future videos that are released, along with any new books, courses, and training material that is set to come out. Thanks again, and I'll see you next time.